What's going on, investors? AK from Fallible here, and today we're going to talk about why the market keeps selling off. It's crazy. I thought we were supposed to get a Santa Claus rally. What happened to him? Someone must have shot him and took his reindeer, I guess. Maybe he didn't make it past the border? Is it Trump's fault? Yeah, probably. Everything's his fault. Anyway, you don't usually see so much selling day after day without any up days in between. So we're going to talk about why that's happening and when it's going to end. So the reason why we think the market keeps selling off is because what we're seeing is a huge clearing of hedge funds. So hundreds of funds are being liquidated after a terrible, choppy 2018 where they got basically destroyed. And you know, during good times like in 2017, everybody looks like a genius because the market just keeps going up. You're not going to lose regardless of your strategy. It's just easy. So when it's that easy, you get a bunch of hedge funds opening up and there's just too much fat in the system, which all gets cleared out during times like this. So on top of hundreds of funds being liquidated, you got thousands of other funds getting huge redemptions from angry investors because they're seeing their money going down and they're getting worried and they're pulling it out. And this is usually what happens even with sophisticated investors. You know, there's that story about Peter Lynch, who his fund did amazing. His track record is great, but the people who actually invested in that fund, they did terrible, because they always pulled out during the worst times. So even if you're the best manager, you just can't control what your investors are going to do. So these liquidations and redemptions are creating waves of forced selling with few buyers to pick up the shares. And that's why you're seeing day after day of down moves. But this is going to end too. Because say if you're a fund, you might have a year-end redemption clause, which means you should probably finish selling most of your stuff a few days before the 31st. And that's right around now. So within a few weeks, we should see a bottom. Now it looks like we are getting closer to that capitulation event that would mark a bottom, but we're still a little bit off. You can see on this chart of advisor sentiment, the green line is bullish sentiment and the red line is bearish sentiment. When they start crossing, that's when you see a bottom, but that hasn't happened just yet here. So there's likely a little bit more downside coming, but once it crosses, that should be the bottom. If we look at sentiment in the media, it's just ridiculous at this point. I mean, what if the Dow fell another 4,000 points? And then you have all these articles coming out talking about the 1987 crash, which always happens. I mean, whenever there's a big down move, they start comparing it to a previous crash. And again, when it comes to sentiment, it's a contrarian indicator. So if people are getting super bearish, that's normally a bullish sign. Because like I always say, bear markets don't die on excessive pessimism. They die on euphoria. Kind of like we saw in crypto. The bull market ended once everyone was just insanely long. If you look at the equity risk premium, which is the difference in earnings from stocks versus treasury yields, it's now 4 standard deviations below the average. And this is an extreme reading. If you check out the bull and bear indicators from Bank of America, you see that sentiment is nearing that extreme bear buy signal that we're looking for. It's not all the way there yet, but it's getting close. And if we look at the fund managers survey, we see that money managers are still holding large amounts of cash. So there's a lot of cash on the sidelines, which is not something you see at a top. At a top, you see excessive leverage and all the cash should be invested. And that's where you get a situation where there's no more buyers, only sellers, and you get a collapse. Here's another chart showing the same thing. Most of the allocations are in cash right now. And if you check out previous 10% plus down quarters after World War II, you can see that the following quarter has a huge jump most of the time. That's likely what we're going to see here. So like we said in the last video, US stocks are setting up for a huge buying opportunity. A major bottom is probably going to happen in the next few weeks. And if you haven't already, make sure you get our free FOMO trading guide. It's going to teach you how to control your FOMO, and those same techniques can actually be used to control your other emotions as well, which is pretty important in times like this when the market is acting crazy. Just click the link in the comments or description and it'll take you to a page where you could enter your email address so I know where to send your guide. And of course, if you want more videos like this, subscribe to this channel and hit that bell so that you get email notifications every time a new video is released. We publish about 3 a week, all market and business related. So subscribe and I'll see you in the next video. Stay fallible out there. Bye.